Hello students, I hope you and your family are doing good. This is Sandeep Pasi and I created this channel to discuss accountancy of plus one commerce with you. Your patience listening and regular practice will help in building good accounting skills. So without wasting much time, let's discuss first chapter of double entry bookkeeping, financial accounting, that is Introduction to Accounting. So initially, we'll start with the definition of accounting. What the accounting is. Accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events of financial character and interpreting the result thereof. In easy language, you can say that accounting is an art of recording, classifying, and summarizing the all financial transaction and communicating the result to the end users. So this is the definition of accounting. By discussing this definition, few of the important things which you can notice that what the accounting is, it is an art of recording, classifying, and summarizing. These are the three important things we discuss in the definition of accounting. It is an art of recording, classifying, and summarizing all the financial transactions. After that, you will interpret and communicate the financial information. I hope this point is clear. After discussing the accounting definition, we are discussing what are the characteristics of accounting. There are 7 characteristics of accounting, and the first main characteristic is it helps in identifying financial transaction and event. And in this, the financial transaction and events are recorded. Only those transactions which are financial in nature that should be recorded. Non-financial transaction will be ignored. Non-financial transaction will be ignored. So this is the first characteristics of the financial accounting or accounting. The second characteristics of the accounting is it measuring the identified transaction. All the identified transactions and events in the term of common measurement unit, that is currency of the country, should be measured. Like if the 100 tons steel is exported, the value or monetary value in terms of rupee 1 lakh. So that is the monetary value of the transaction. So you have to measure it in the terms of money. This is the second feature of the accounting. The third feature of the accounting is recording. What the recording is? It is the process of recording business transaction of financial character in the books of original entry. And what is the name of that book of original entry? That is journal. Mind it, journal is the first book where all the original entries are recorded. After this, this book is subdivided into subsidiary books. And what are the name of those subsidiary books? Like cash book, purchase book, sale book, purchase return book, sales return book, and journal proper, and so on. So recording means recording of the all financial transaction, that is recorded in the books of original entry, and the name of that original book entry is journal. After that, you will classify. What is classifying feature? Classifying is the process of collecting similar transactions at one place by opening the account in the ledger book. Means all the transactions of same nature should be recorded at one place. Like I open account for Rahul. That is Rahul account, and Rahul account is now ledger. It means all the entries related to the Rahul should be posted in the Rahul account. The next one is summarizing. What the summarizing is, it involves presenting the classified data in a manner which is understandable and useful to internal as well as for the external user of the accounting statement. Means you have to present the data in understandable manner. And how the presentation is done? Presentation is done in the form of trial balance. This is one of the statement you prepared. The second one is trading account and P&L account. Then it is balance sheet. So these are also known as the financial statement of the company. Then the sixth feature is analysis and interpretation. Financial data is analyzed and interpreted so that the users of the financial data can make a meaningful assessment, and the performance and the financial position of the company can be judged in a better manner. So you will analyze the data so that it is easy to understand it. So it is easy to understand the data. The last one, you will communicate the all financial information to the end users. These are the external users as well as the internal users. Who are the external users? Who give loans to the company, say bank. Who are the internal users? Say owner of the company, manager of the company. So all the financial information will be shared with these people. So these all are the attributes or characteristics of the accounting. Once again, I am repeating all the attributes. The first one, you identify the financial transaction and event. The second one, you measure the identified transaction. The third one, you will record that. Fourth one, you will classify. Fifth one, summarizing will be done. Sixth one, analysis and interpretation will be done. And the last one is communication of the data to the end users. After that, the next question is accounting a science or an art? It is very easy to answer this question. Accounting is an art as well as a science, and science too. Why it is an art? It is an art because recording, classifying and summarizing of the financial transactions are done as per the objective of the organization. So it is an art because every accountant use his scientific tool, his artistic skills to present the data. It is science also. Why it is a science? Because accounting is an organized knowledge which is based on certain principles. Based on certain principles. So anything which is based on certain principles, that is an science. So we can say that accounting is an art as well as it is a science too. Why it is an art? Because applying of the knowledge is done. The second one, it is an art because it is based on certain principle. So accounting is both an art as well as a science. Now we'll discuss what are the different branches of the accounting. With the changing of the times, the following are the different type of the branches that has been followed. There are three branches of the accounting. The first one is the financial accounting. What the financial accounting is? This book which we are studying, that book is Double Entry Bookkeeping Financial Accounting book. So the next two type of accounting we'll study in the BCom. So firstly we'll study what the financial accounting is, in which all the financial transaction and events are summarizing and interprets before communicating the result to the user. That is financial accounting. So we can say that when all the information accounting, or when all the financial transactions are summarized and interprets, means when we prepare financial statements, that is P&L account and balance sheet, by using the financial information, that is known as the financial accounting. What is cost accounting? It deals with recording cost. Ascertaining the cost, as well as reducing and controlling the cost. So these are the three basic measures which is done in the cost accounting: recording the cost, ascertaining the cost, and controlling the cost. The next one is the management accounting. It is the recent developed branch of the accounting which is concerned with using the information related to funds, cost, and profit. So there are three centers in it. The first one is fund center, which is known as investment center. The second one is cost center. The third one is the profit center. And all these informations help in decision making to the management. So that is why it is known as the management accounting. So there are three branches of accounting: financial accounting, cost accounting, and the management accounting. And this book is related to the financial accounting. Even in plus 2 we'll discuss about the financial accounting only, right? After discussing that, we'll try to understand what is bookkeeping. Bookkeeping is often considered same as the accounting, but it's not correct. Bookkeeping is different, accounting is different. Bookkeeping is an art of recording the business transaction in a significant manner. And another definition says that bookkeeping is concerned with identifying the financial transaction, measuring them in money, and recording them in the books of account and classifying them. So if you can recall, when we discussed about the features, the first feature was identifying the transaction, the second one measuring them in the terms of money, and the third then was recording them in the books of account, and the fourth one was the classifying. So up to classifying, when the things are done, that is bookkeeping. I hope it is clear to you. So bookkeeping is an art of recording the business transaction in a significant manner. Then we'll discuss what is the basic difference between the bookkeeping and accounting. The first basis of the difference is scope. So bookkeeping is concerned with, as I told you, it concerned with identify the business transaction, measuring the business transaction in the terms of money, after measuring them, recording them, and after recording them, when you classifying them. So when you do all these things, this is bookkeeping. What the accounting is, the accounting scope is concerned with summarizing, interpreting the transaction, and communicating the information to the end user. So this is accounting. Now the second basis of the difference is stage. It is primary stage. Bookkeeping is the primary stage because it is the basis of accounting. And if we talk about the accounting is the secondary stage. It is secondary stage. Third one, objective. Objective of the bookkeeping is to maintain systematic record of financial transaction. Systematic record of financial transaction. And the objective of accounting is to ascertain the net result of the operation and communicating the information to the end users. So it is to ascertain net result and communicating the information to the end user. Nature of job. It is the job of the bookkeeping is routine in nature, very ordinary one. And the nature of the accounting job is analytical and dynamic. Performance. It is done by the junior staff. And accounting task is done by the senior staff. And special skills. No special skills is required. No special skills required. And for performing the accounting, special skills are required. So these are the basic differences between bookkeeping and accounting, right? After discussing the basic differences between the bookkeeping and accounting, we'll discuss about what are the objectives of accounting. The first objective of the accounting is to record of financial transaction and event. All the record of the financial transaction and event should be done in the systematic manner. Systematic manner, and you should follow the principle of accounting. So the accountancy principle should be followed, and this should be done in the systematic manner. The second objective is to determine the profit and loss. The profit and loss for the particular organization should be measured for the accounting period. What the accounting period normally means? In India, accounting period starts from April, and it ends on March. This is the accounting year, and calendar year is from January to the December. We follow the accounting year. We start from April to March, right? So you need to determine the profit and loss, how much you earned profit, or whether you occurred a loss or incurred a loss. That should be measured for a particular accounting period, right? And this is measured with the help of preparing trading account and P&L account. The next objective is to determine the financial position. How the financial position of the company can be judged by preparing the financial statement, which is known as balance sheet. Balance sheet shows the financial position of the company, like whether the position of the company is good or it's bad. So with the help of the balance sheet, as well as by seeing the profit and loss statement, you can judge the financial position of the company. But balance sheet is the main component which shows the financial position of the company, whether it is strong or it is weak. The next objective is to assist the manager. How the financial accounting assists the manager? By providing useful information, and by getting this useful information, they take the decision. Who take the decision? Manager take the decision regarding how to exercise the control, how the budget should be prepared, how the forecasting should be done. The next objective is to communicate the information to the end users. Who are the end users? They are the user who analyze the information as per their requirement. Like the owners of the company need the information to know whether the company is profitable or not. Manager need the accounting information to judge because the managerial commission is dependent upon the profit of the company. Similarly, the bank are the end users. Why they need the information? Because they want to check the loan they should give to the company or not. Similarly, the government is also interested because the government want to keep an eye on the financial transaction of the company or organization. The last objective is to protect the business assets. How the business assets are protected? By keeping the record of the business assets. By keeping the record of the business assets, the organization will be able to know how many assets the organization have, and on the basis of that they can protect the asset and they can control the asset. So this is the way the accounting serves, and these are the certain objectives of the accounting, right? After discussing the objectives of the accounting, we will discuss the limitations of the accounting. The first major limitation of the accounting is not fully exact. What does it mean? That there are certain estimates. On the basis of that, the accountancy data is prepared. Like we need to make the estimates regarding the possible bad debts of the company. Possible bad debts of the company. Like what do you mean by bad debts? These are those people who not able to pay their money on time, right? Like we sold the goods on credit to anyone and they are not able to pay the money on time. The company need to make the certain provision for that how much money will be like that who falls under the bad debts. So you can't say that all the information is that. There are certain estimates on the basis of the accounting information is dependent. I hope this point is clear. The second thing, accounting does not indicate the realizable value. What the realizable value is? If you sold the asset into the market, the amount of the money which you get, so it is the market value of the assets. But accounting does not show that because the assets are not purchased for sale. Assets are not purchased for sale. So most of the time you purchase the asset for using them, and by using them you actually earn a money out of it, not by selling that. So if you are not selling the asset, why the realizable value should be recorded? So accounting does not indicate the realizable value, it only tells the historical cost of it. The next limitation of the accounting is accounting goes the qualitative data. The qualitative data means all the information which is in the quantitative form that need to be recorded. Qualitative form information will not be recorded, like the quality of the staff, which helps in increasing the performance. But because the quality of the staff is non-monetary, it will not be included in the accounting. You have a good industrial relationship, that will not be recorded. So industrial relationship will not be recorded. So this type of the information will be ignored while preparing the books of account. The next limitation is it ignores the price level changes. Tell me, the money value remains same or not? So money value will not remain same. The money which you have today has the more value compared to the money which you are going to have tomorrow. Example, when you prepare the accounting, all the assets are recorded at the historical cost. Means, suppose I purchased the assets for 1 lakh in 1991. The same asset will be recorded at 1 lakh rupees even in 2005 if there is no depreciation. Means there is no reduce in the value of the assets because of the wear and tear of the assets or because of the usage of the assets. But tell me, 1 lakh in 1991 has the same value as it is going to have today? No, it has very less value in today's time compared to the value it was having in 1991. So if you talk about the accounting ignores this type of the value. Coming to the last limitation of accounting, that is, it may leads to window dressing. What is window dressing? Window dressing means manipulation of the account so that you can conceal the vital facts and present the information in a manner you want to show. So it means concealing the information which is vital and presenting the information in a manner or better manner. Presenting the information in better manner. This is possible, and many times we have seen certain examples of it, like in the case of the Satyam. The Satyam owners, with the help of the one auditing firms, that is PricewaterhouseCoopers, what they did, they tried to show the falsification of the accounts. Means accounts are presented falsely, and because of that they were showing that the company is earning a profit. Vice versa, they were not earning that much profit, so they were trying to falsify the account and trying to show the good picture, which is not desirable. So it is one of the limitation in accounting. It is possible you can present the better position of the accounts. So these are the certain limitations of the accounting. That's it for today. Next time we'll discuss the other parts of this topic. Till then, take care of yourself. Thank you.